So we are looking at Nasdaq, day 31st of July 2026 is the last day of July. So this is pre-London. As obviously you can see, I've already marked out two inefficiencies. This is the lower one and this is the premium one. The discount one, the premium one. So we are bullish. I'm expecting higher prices. If we look at the 1 hour chart from yesterday, you can see how we had bullish prices and we've ran into this high here. Let me delete this here. And now I'm looking at this as relative equal low, relative equal high, sorry, and I'm expecting price to run into those. So you can see from Asia, from Asia we've been running higher. We ran into these highs here. Let's look at a 4 hour chart. Yeah. So you can see from yesterday's price action, ran higher. Opened up today 0 GMT, we've ran higher. I want to see price now run into this inefficiency. We do not behave very nicely with this inefficiency. So I'm kind of like skeptic about it. But we ran higher, ran through it. You can see the body is here, one, then ran outside it. You can see the midpoint of this inefficiency is around here. Right here. And now you can see how we're running into that one. So I wanted to see it run higher like that because you can see we are bullish. So best it can do, I want to see it run above this high here, and that is the pull of buy side. You can see how we formed a relative equal highs there. So this 48.28. That's the pull of buy side that I want to see price run into. So we are trading at 20,399. That's around 400 level. Let's just buy that 400 level. If it price is lower, let's put a limit order, buy that 400. That's my limit to buy at 400. You can see it trading at 410 now. So I want to see it run into this buy side here. If we go straight higher into 420, I think I want to buy that 420 level. I'm very skeptical about buying that level because we might have a minor retracement and then start to trade higher. So I want to write this buy side. And you can see it's just ticking up around 408 now, 409. It's going to 410. So if it goes to 420, I'll not be interested in buying it. I'll just wait for that retracement. And you can see what's the time. It's 7:34. That is 34 minutes past midnight in the New York time. So I'll just wait for it. I'm wondering what these two levels are. What are those levels from the daily chart? Remember we went through them. Now we're back on them. So just wait for it. So trading at 407. Still, I want to see that 400 level support price and then start trading higher. So I want to annotate the midpoint of this inefficiency here. Widen this. So you can see how we've gone away from that inefficiency. and we've closed it right there. So I still believe we might run into that 400 level and then start trade higher. You can see there's inefficiency. Just this 15-minute chart, right? So you can see how we have closed this inefficiency, and then this candlestick has opened at 735, 35th candle. The low here is 404.30. So I don't want to be finesse that. Just want to be patient. I know that we're gonna trade higher still. So from the daily chart, you can see how we traded lower, and then yesterday, as this price action ran higher throughout this candlestick here. That is, we ran through Wednesday's high and Tuesday's high, and we're so close to Monday's high. So we are still trading inside this wick here, but I'm interested in this one here because it's bigger. So I want to highlight that wick's midpoint, but let's just see through the lens of this fib. That is 393.60. So we might find support on that 393. So you can see we are back inside this inefficiency. So my order is still at 400. I want to see it pick that order. And we're back inside this inefficiency. That's the most important thing. So I want to see price. Let's widen this here and then let's look at the lens of this. I want to see price find support on the upper portion of this inefficiency here. So this candlestick here, the low here is 398.40. It has not yet picked my order there because it has like 2 points worth of a spread. That's why it has not picked my order there. So just gonna be patient. We're gonna look at this chart here in the lens of this very wide candlesticks. So you can see the 15-minute here, we've been going higher. Had this retracement here in Asia, and I'm looking at the middle New York Open. We've opened here in a New York Open, and you can see how it's running higher. So you can see it has run into these lows here, barely picked up my order there, and now it's kind of like pressing in higher again. This is another reason why I like just putting in orders with my with my with the direct entry, because this I could have finessed that like around 4-1 or something. It could have been very nice. We have another inefficiency here. Let's highlight that and let's see how price behaves with this one here. So you can see we're trading at 418s now. That I could have been around 417 to 20, 17 to 18 points in now. So you can see we're trading at 419s now. It's 420. Beautiful, right? Just very small consistent price runs, and you can easily get 20 points. We're trading at 21 now. It's beautiful, right? I just explained this, how we've traded around this here. So we're inside this very small inefficiency, and if we run this buy side here, that will be it for me for today. So I came in front of price, we're trading around here, and I established my bias as bullish, and I noted this inefficiency here. That's where we are from. If I could have been woken up and I could have been around, we could have been trading around here, and then we formed this inefficiency when trading here. Bias has still been bullish. It's just that this is just a minor retracement, and this retracement here makes a lot of sense to my interest in price. So if we grade this price swing here from this high here to this low with the bodies that high to that low, well, I'm using this one here because it's lower. You can see the midpoint that inefficiency is here. So this wick here makes a lot of preference, and I want to see if price goes through that wick here. I want to see it nothing like a step back. I don't want to see price spending time at this week here. So I want to see price run higher, and it does the same exact thing here. So it's going through that point in price action first, and what does it leave behind? An inefficiency that it never trades into. So this to me is very bullish. And now my eye goes into this inefficiency here and this one here. My eye went into this inefficiency first, so I highlighted it. I wanted to see price run into this one here first and then run into this one. I've talked about this inefficiency, how I'm very skeptical. I was skeptical about that, and then you can see how price trades outside that inefficiency. It's not like it's a suspension box. It's not like we have a balance here, because you can see the close and opening prices of these candlesticks. So we trade through this inefficiency, we close outside it, but you can see how price reacts immediately and trades through that. So that's very important also. So we trade lower with the wick outside that low here, take all the sell side below that low, and then we close outside the midpoint, and then you can see how we open, run higher. And after that, we do not even retrace back into this inefficiency again. You can see the opening price, we touch that, we close higher. When that, we touch that again, very bullish candlestick here. We run above this high here and trade into this wick. I don't want to be looking at this inefficiency here because we have this wick and it's huge. So we run into that, we run into that, we run into that, and then next area of next area of interest is that inefficiency, and we run through that. And the next area of interest is that inefficiency, and you can see now we are trading inside that inefficiency. Best case scenario it can do, we're running into around 7. We're trading at 7:43 now. That's 43 minutes past midnight New York Open. So when we run into 7:50, I kind of like expect a down close candle here, and then we start moving higher again. If it does that, that would be a very perfect, very beautiful price delivery. But when it runs just directly, like it's going to do now, that's also beautiful. That's also even better. And I suspect that it's gonna do that because we have this here. We never traded into this inefficiency, and we went through this one here, and it's also in the midpoint of that range. So it has no patience for those buy stops, for that buy side liquidity pool there. It's gonna run into that. So that high is around 400, and let's just look for the exact high. This high is 448.28, 20,448.28, and we're currently trading at 428.80. So we're remaining with around 20 points to get into that high. So we've run that inefficiency. You can see how we opened up here, we touched the low of that inefficiency, that one that I've just drawn out, and we've gone higher. This is strength here. This is strength. So we're trading at 430. You can see how it's moving higher. So another thing that price can do, we can get so close into this high here and never take it out. I've seen price behave like that a couple of times. It can get so close into that high here and not take it. But because I've explained this price action here, I think it's gonna just go straight into this. Before it does that, I want to see a down close candle here first, and then we start running higher. That will be very nice. So we're remaining with 3 minutes until the closure of this candlestick. So we are stagnant around that 430 level. And I've talked about the effect of this macro. Normally, is that it's a retracement or just a change in momentum. And sometimes it can just be an acceleration of what is currently in price action. So we're putting down at 423. So my eye is still at this inefficiency here, and now we behave on top of that inefficiency and around the midpoint of that inefficiency at the low. So very important price points. So we're remaining with 1 minute, and then that macro is gonna start gyrating. So I really want to see it run straight into this buy side. That will be very nice. So there we go. So we've never touched this inefficiency here. Interesting. And there we go, we've touched it. So we've gone through it. We've not touched the low of that inefficiency, and then we're back up at it again. So can I buy 420s? Honestly, yes, I can buy 420s. let's take a step on a long at 420. There we go. Let's move this here. And then let's see how it trades now. So we're trading down at 415, 414s. So we've gone outside that, very small inefficiency. So the best I want to see is this one here because this is more prominent. So it won't really be a problem to me if we transit this one here, but I will not want to see it start trading to the lower portion of this one here. So best case scenario, I want to see it remain inside that one there and start trading high. That's the best case scenario. So there we are up at 426 now. So we had a down close candle here. So they were buying it inside here. So we've gone through that inefficiency. We've gone just a little bit through it. This candlestick's high is 414.40, and so far this candlestick's low is 412.90. So 2 points below the low of that inefficiency. I mean, that's interesting. And then now we start trading higher. So best case scenario, I wanted to see it just stick to higher prices and go above this one here, this candlestick's high, which is 43.65. So we're remaining with 1 minute until the close of this 5-minute candlestick here. So let's see how it, and there we go. We've closed an up close candlestick here. We've closed away from that very small inefficiency. So that speaks volume. So I want to see it start to gyrate higher. Going into we're trading at 428 now. So I really want to take these above, just so close to that high. So if I were to be aiming for 20 points, that 440 level is around here, almost on the midpoint of this week here. So far it's behaving nicely. We've gone above this inefficiency here that I highlighted, and now we're trading above it. We've closed away from it. Leave alone the wicks, they do the damage. Look at the bodies, they're closing away from it, and I want to see it start to run higher. So remaining 2 minutes until we close this hour. We'll close that 5-minute candlestick. We're trading right there at 430s now. Remove this here. Remember this bicep. Well, sometimes when you're supposed to be starting out or doing this kind of drills, you want to be reminding yourself why you are bullish or you're bearish in all scenarios. You want to be like repeating to yourself and not really like going into the opposite, going in and you're going into the opposite side of the marketplace. You want to be reminding yourself that what makes you to be bullish, what did you see, and you want to be sticking to that bias. However, how price gyrates around wherever it gyrates into, you want to stick to that bias, and you want to be reminding yourself that you are right. I mean, you've back tested, you've done everything, you've seen it in the past, so you want to be reminding yourself of what you're sticking to, and that is important. So in that case, we started a new 1 hour candlestick, a new 15-minute, and a new 5-minute candlestick. I've been talking about higher prices, and you can see how we've been trading higher from Asia. Even from yesterday's price action, we've been really been bullish, and we've been trading higher from Asia. We ran higher, made this high here, and then we made this run lower here, and I've been expecting higher prices. So we had this inefficiency here, did not really find enough support on that inefficiency. We ran higher, ran into this efficiency here again, and you can see the way price, the most important thing with this inefficiency here is the way price propels outside that inefficiency to facilitate higher prices. It does it again here, and then it runs out of that inefficiency. We've run higher here. I've talked about that week here. I've talked about this retracement here, that range. and the reason why I want to see price go above that buy side. We've ran higher. I talked about this inefficiency here. We ran that inefficiency. We did not spend a lot of time inside that inefficiency. We went through it, and now we're trading on that upper one. And now where are we? We are spending time on the upper portion of that inefficiency. That's still bullish to me. That's bullish. So that's why I'm still patiently waiting for price to deliver the higher prices. So another thing is not like price is spending time inside this inefficiency. We are above it. So if we start coming back into this inefficiency here and spending a lot of time and start generating around the lower portion of that inefficiency, then I'll probably be incorrect. So we're 2 minutes into this new hour, into this new 15-minute, this new 5-minute candlestick. I still am patiently waiting for it to deliver higher prices. It's trading lower, trading on 423 now. So again, we had this run here, and then we start trading above it, ran through here. I'll see that inefficiency, went through it, ran to that low here with the wick here, collected out the sell side, we ran higher. We have this CB here, we ran through it, never touched it, and now we are on top of that CB, today on 423. I'm still expecting higher prices. Daily chart, we're trading higher. This candlestick high, this is Monday's high, Monday, Tuesday, Wednesday, Thursday, and Friday. This Monday's high is 603.25. So 603 is a little bit far away from where this 5-minute candlestick is trading. But that's the draw on liquidity. And remember, we have this here. Remember, we had this new week opening gap here from Monday. In fact, that's also very important. And you can see the new week opening gap is here. I think now that we are sticking around here and it does not really want to go higher, I think if we start trading lower, then we'll be reaching into this new week opening gap. That's so obvious, right? This new week opening gap, and the new week, that new week opening gap, and that mid gap is there, and below that low. See that? So I don't think really we've really finished with this range here. I want to see it still run higher first, and then we're gonna do that. If it will run into this low here, it better do this high here first, and then it will run into this low. That's how price is manipulated. If we start trading here lower from this point here, I don't really think it will run this low here. We might just have a retracement and then run here first and then start to run into this low. That's 434 and 435. So if we go to 440s, that will be it. And I think I'll just take that out manually. So that's 39 and that's 40. See that? That's beautiful, right? That's it. I think I've got it out 39. Yeah, that's 40 constant period. Let's say today, because yesterday I had a very big loss, which I'm gonna show it now. So that's it, 420, 440. That's 40 points, and I want to see it still run to that bicycle there. So beautiful, beautiful run higher, and I think that does it for this day. So I'm gonna take the screenshot here, and then I'm gonna showcase what I did yesterday, and then I'm gonna close this up. So I think it has saved it. So let's look at what yesterday did and what I was trading yesterday. So we're trading here yesterday, opened up midnight New York opening price, and I was looking at from where we opened up at 0 GMT down here. We had a very huge run higher, and we have this basically balances inefficiency. So we keep trading higher, and then I want to see when we opened up at in Asia. So we open here in Asia, we start trading higher, and then we reach at this point here, and then the market shift, we start trading lower. So I came into the market around this time here, and I was bearish. It was trading around down here. I was bearish, but I was very skeptical about this inefficiency here because we touched it and then started trading higher. So one thing you don't want to do with this kind of trading, if you're trading momentum, you just don't want to come into the marketplace and jump right into it. You just must take time to read where price is going into, what are the inefficiencies that prices are finding support in, where is it finding resistance in, and you want to be taking note of swing highs and swing lows. Does price take an initial swing high? Does it take an initial swing low? So yesterday I came into the marketplace and I established my bias as bearish. I wanted to see it run again. We'd already run into this inefficiency here, and then we were trading higher. So I think I ran into a short around here. There we go. That's the short. So I was looking at this inefficiency here, this CB here. We ran into it once. We start trading lower, and then we ran into that twice right there, and then we start trading lower. So I'm like, I want to be bearish and finish up with this thing here. So I jumped in on a short there, and then it started gyrating here. I mean, I was aiming for 20 points. From here, you can see this candlestick slow. This candlestick slow is, so my entry is at 350.3, and I was aiming for 330. So this candlestick slow, it gyrates into around 329, just 1 point to fill me in. He does not fill me in. He did not fill me in. That was wild, right? It does not fill me in and then start trading higher. So I'm like, I don't want to see price going to the top of this inefficiency, or else we'll be running a lot more higher. And we did it here. So once we did it here, I wanted to see it, give it more room to start trading low. And then it opens up, sticks around that area, and then runs higher. And then I was like, I'm done. And then I exited right there on a loss of $102.42. And then look at what price does next. Start trading lower, and then goes even a lot more lower, right? Was I right or wrong? I'll leave you that up to you. One thing here is the momentum is right. It's just that my entry here was not right, and my exit here was failed. So one thing again I need to focus on is how to manage this kind of risks here. But you never know where it's gonna go a lot. How much of a high is it gonna pose? I've been taken out of this on this kind of trades here. This kind of trades have blown my account, where it goes and then it's just not really efficient enough for me, and then I get out, and then the next candlesticks here start to trade lower. I've been on those trades here a lot, and I hate them. But that's the risk of doing business. So we run higher, a lot more points higher. This candlestick's high is 346. No, 404. That's more than 50 points. That's why I got out at 102 with a net loss of 102.42. That's 50 plus points. So the risk of doing business, but then you can see we start trading lower, and then we start trading into this inefficiency here again. So I still believe that momentum is the way to go. It's just one thing I need to do is to know how to manage these risks. So I don't want to be spending a lot of time here. I learned a lot from this kind of trading here, but we're gonna get that back, and momentum is just the way to go. So you can see today I've talked about all this, how it has happened, and how I wanted to see. I wanted to see it trading to the other side, but it's spending a lot of time here, and that's how I got these 20 points of mine, and I'm satisfied with that. So that's it for today. Until we meet on Tuesday. Adios.